Hey, what's up guys? Houston here. Look, if you're trying to get anywhere between $50,000 to $150,000, okay, and you are a new LLC, you more than likely are going to have to use the 5-step tier system. All right, and for those of you that's not familiar with this, I'm gonna break it down. However, the thing about it, you have to understand, all right, they're going to ask you, the banks will ask you, are you going to be personal guaranteeing it, or are you going to use an EIN number? Okay, so when they ask this question and you say, well, I want to use just my EIN number, the next question they're going to ask is revenue. What's the revenue in the business? Now, I could tell you, for most lenders, all right, when you're trying to get high limits, high funding, unsecured funding, you have to have high revenue in the business. And what I mean by high revenue, they're wanting you to go anywhere from $5,000 and up on revenue, okay? On revenue in order to qualify. However, there are some lenders that will take less revenue, and I'll explain those as well. All right, so that's the thing about it. Now, for you guys that are in partnership with an LLC, please keep in mind when you go into the big dogs, the main banks and stuff like that. I'm talking about Chase, Bank of America, American Express. All right, when you go into the big dogs and you expecting to get $50,000 to $150,000 and you have an LLC with a partner on it, they also look at their credit as well. Okay, so this potentially can disqualify you for funding, because if their credit is challenged, if they coming out of a bankruptcy or whatever, they look at that. And so that can potentially stop you from getting the funding you need. All right, so that's something that you have to keep in mind. All right, now another thing is that when trying to get $50,000 to $150,000, it really does matter in terms of the relationship with the institution and the type of institution that you're actually going to get funding from. And I'm going to break down the best institutions you want to do that with. However, I want you to keep in mind, all right, that you must, okay, you must, or I would say, if I were you, I would make sure that I have a relationship with the major banks that report to the Business Credit Bureau the most. Okay, so that would be Chase, Citibank, Capital One. Because with these three banks, they usually report to Experian Business, Equifax Business, Small Business Financial Exchange. Now, Small Business Financial Exchange is a very key in terms of when you're getting funding, when say that you're trying to go to like SBA, right? And I'll tell you something else about Small Business Financial Exchange. They share that information also with Experian Business as well as Dun and Bradstreet. So that's the reason why I tell you most of the time you don't have to sign up for Dun and Bradstreet services in order for your information to be populated over to their system, okay, or to get a DUNS number, because it'll automatically create it. All right, so that being said, now one of the big questions that a lot of financial institutions, they're going to ask you, what do you need the money for? All right, so when they ask you, what do you need the money for, you have three responses. Okay, so those three responses, you need money for payroll, you're going to need money for marketing, you're going to need money for expansion. This is how you respond. All right, there's no magical thing. Now, usually I tell you about your NAICS code, okay, and your SIC code, because this can also play a factor, because if you have a high risk NAICS code, this can become challenging also in terms of helping you get funding. All right, so just keep that in mind. Now, breaking this down, looking at where do we start at? All right, now here's the thing about it. When you have a new LLC, you have no revenue in the business, all right, then you want to start more likely with your fintech, okay? So your fintech companies, all right? So fintech companies that I would use, there's 5 of them, all right? You have NAV, you have Shirtsy, you have Crown Office, you have Fair Figure, okay? And then you have Incredible, okay? And I'll explain each of these. Now, the reason you want NAV is because it's giving you a financial instrument as well. Financial instrument, especially when it comes to funding, is very important. So that financial instrument that they will give you is a charge card, okay? That you don't have to put any money up front to get access to this charge card. What they do, they connect your business bank account. Sometimes they may have a challenge with finding your business. Okay, if your business is not properly registered and you say, well, it's not coming up in the system, then you would have to check with LexisNexis, Dun & Bradstreet. You would have to check with Experian and Equifax. Now, the reason is to make sure that that information, that business information is matching. Okay, so that's the reason why you have to have this information, right? In order for them to find it. All right, so they give you 2 trade lines to help you build up your business credit file. They give you one for product service, which is their credit, which is their business credit and personal credit monitoring service. Then they give you the debit card. So those are 2 trade lines. All right, then you have Shirtsy and Crown. They will give you one. Now, please keep in mind, these accounts that I'm talking about, these are accounts that report into the major business credit bureaus. Remember, you're starting out with a brand new LLC, okay? And this is the proper way to do it, all right? Now, you can jump the line, yes, but I'm telling you, if you do it this way, you'll have more success and you'll get bigger money, all right? Now, with Shirtsy and Crown, they also report to Experian, Equifax, and Dun & Bradstreet as well. Again, it's showing another factor that you don't need to buy a Dun & Bradstreet product in order to get their service. NAV reports to Experian, Equifax, small business, as well as Dun & Bradstreet. All right. Then you have Fair Figure, Experian, Equifax, TransUnion. I'll tell you a story about TransUnion and Dun & Bradstreet. In 2011, Dun & Bradstreet and TransUnion and Dun & Bradstreet actually tried to build a relationship because TransUnion doesn't report on the business credit file. So they merged a relationship with Dun & Bradstreet to get some credibility for the TransUnion on the business credit file. All right. So that's just a little history some of you all may or may not was aware of. Okay. Now, that being said, like I said, with Fair Figure, report to the major credit bureaus. Incredible. Now, let me tell you about Fair Figure. Fair Figure is similar to NAV, all right? So Fair Figure being similar to NAV is going to give you a product trade line. And if you have revenue in the business, at least $2,500 or more in revenue, they'll also give you a loan, which you'll have a financial instrument on your credit file. So then if they give you a financial instrument because you have at least $2,500 in revenue, and then NAV is going to give you a financial instrument from the credit card, plus Shirtsy and Crown, those are product instruments. All right. Now, please also keep in mind with these companies, I know people look at their business credit file and say, well, I don't see this company. Well, again, they're not going to show the name of the company, okay, or the bank. Usually they're going to let you know it's just a financial instrument that's showing, and it'll show the balance of it. However, they will not show the name of the company. All right. So don't look for the name of the company. All right. Now, that being said, Incredible. Like if you have a home-based business or you have a business where you're paying utilities and stuff like that, Incredible. And it also reports to the business credit bureaus as well. And the point that reason I'm making this here so you can understand is that you do not need 10, 15, 20 net 30s. Is not necessary. That's money you can actually put in the bank making regular deposits. That's going to help your business bank rating as well. All right. So that's the reason why I tell you that you have to do this a certain way. All right. So your fintechs are your first ones. All right. Then the next level would more likely be your credit unions. Okay. So going to your credit unions, looking at which credit unions are not going to give me a hard time getting funding without doing a hard pull on the credit, okay? Or looking at the revenue in the business. All right, that's the thing about it. Looking at the revenue in the business. Now, when it comes to those, you would have Navy Federal, you would have NASA. Okay, you would have Baxter Credit Union. So these here three would be good credit unions that you would actually want to take a look at in order to get funding. All right. Now, also, when getting funding with these here institutions, of course, you have to join. And the reason I tell you guys not only not joining, but also opening up a checking account, a savings account, if they offer a CD, a money market account, because the more products you have with an institution, the more they trust you, okay? And they see, especially when you open up a money market, a CD and stuff like that, they know that you're hanging in there long term, all right? And so that makes it easier for them to be willing to give you a business credit card or some business funding. All right. So that's the reason why I tell you guys this. All right. So with Navy Federal, they're going to use Experian Business FICO 9. All right. Then with NASA, they're going to use Experian Vantage 4. Okay. And then with BCU, they're going to use TransUnion Vantage 3. All right. So these here would probably be your best. Now, one of the things about it with BCU, they may want to do a phone conversation when you first open up the accounts and stuff. Then when they ask you, what do you need the money for? All right. Again, you want to tell them either you're going to be doing a payroll. Most of the time, I would tell you, I would focus on you needing marketing dollars to run online ads, okay? This is what I would tell them, all right? Now, you also have your regional banks, okay? So with your regional banks, when trying to get funding, all right, here's the thing about it. If you're not in that region, you would have to set up a registered agent, okay, in that region in order to qualify for their products and stuff like that. So that's one thing you do have to keep in mind. All right. Now, here's the thing about it with them. With your regional, you have First National Bank. Oh, okay. You have First National Bank. Many people, they would look at Truist, okay? However, I would not look at Truist because Truist uses a FICO 8. So I would not look at Truist to go after funding, all right? I would stay away from Truist at this here point, all right? Now, you have BMO, all right? So you have BMO, you have a PNC, okay? Just giving you a few of them so you can have an idea in terms of funding, all right? Now, with your First National Bank, they use Experian FICO 9, all right? With BMO, they're gonna use TransUnion FICO 9. Excuse me, TransUnion Vantage 4 with BMO. And then PNC is going to use Experian FICO 9, okay? So this is just a few of them. And again, I'm always trying to focus on the low-hanging fruit to make it much easier for you to get qualified for funding without no revenue as a new LLC. Now, I know some people are like, well, what would usually be your average credit score with these institutions? Now, there's two things that these institutions are going to look at. Average credit score, I would tell you, usually about a 660 to a 680, and the DTI, all right? Especially if no revenue in the business, brand new, and looking at the minimum credit, okay? 660 to 680 DTI, you want the DTI, making sure your DTI is usually below this 55%. I don't know if you guys can see that. I hope you can hear me though, all right? So that's something that you really have to understand in terms of the credit score, the credit bureau, the DTI, all right? Those are the three biggest factors when they're looking at the credit score, all right? Looking at the credit file in order to qualify you, okay? Now, there is one other thing, and that's the age of the credit file as well, all right? So these companies, yes, they still will look at your credit file. But think about it, the age of the credit file also makes a difference, all right? And how many trade lines is on the credit file. So if you thinking that, oh, I got 2 trade lines, I have an 800 credit score, I can get funding. No, it doesn't work like that. Your file is not thick enough. Okay, you don't have enough revolving. The amount of perfect revolving accounts you have to have on a file, which is like your credit cards and stuff like that. The best thing, like I said, is opening up the personal account, the checking account, the personal checking, the savings, and the business account, and a money market account, okay? And the reason is, again, because you want all 4 of these things to work in your favor. Now, here's the thing about it. Again, that DTI, the credit score, as well as the age of the credit file does matter, all right? So just keep that in mind. They're usually looking for, with the business credit cards, it doesn't matter, all right? But the number of accounts on the credit file matters, okay? So most people, they would have like, I would say have a minimum between 3 to 4 revolving accounts on the credit file when you're trying to go get business funding, okay? And if possible, add on, make sure that you have either a secured loan, a car loan, a student loan, some type of loan on the credit file as well to help balance the file out, all right? So that's also important, all right? Now, let's talk about Tier 4. Now, with Tier 4, most people would think your major banks, your big dogs, okay? So your big dogs, we talked about, which is Chase, Citi, Amex, BOFA, right? Just to give you, and Cap One. These are your big dogs, all right? So when it comes to the big dogs, a lot of people, they would run the Chase. Now with Chase, again, because these institutions uses a FICO 8, I particularly will not start with these. I would make sure I can get the maximum amount of funding under these, okay? And there's the Tier 5 that I'm gonna explain to you if you have bad credit, but you do have revenue in the business, okay? So meaning that the credit is below a 660, but you still have revenue in the business, that's your Tier 5. I'm gonna explain that to you. Now, going back to this, most people would look at Chase, okay? So with Chase, using FICO 8, Experian, if you're brand new, TransUnion and Experian, all right? Then with Citi depends on the card, usually would use Experian or Equifax. So if you was going to Costco, Citi Costco, that would be a Equifax pull on the FICO 8, all right? So just so that you all know that, all right? Then with your Amex, again, with your Amex, they use Experian, but if you're brand new, they usually do a double pull, Experian and TransUnion, okay? So FICO 8, and they will give you your actual Experian file. Now, With BOFA, they usually use TransUnion. Sometimes they'll use Experian, but most of the time they'll use TransUnion FICO 8. All right. And then with Capital One, they pull all three. However, you can use you can lock up one of your credit bureaus, okay, with Capital one or two of your credit bureaus, and they'll just pull from one. Just depends on the card. Now, let's talk about funding when you have like below a 660. Where do you go? Where do you start with? Okay. Now, this is where it determines if you have revenue in the business. All right. This is a big factor. All right. And you're trying to get that 50 to 150,000. Again, starting at the base, you have Giggle. So Giggle gives you the 5,000, right? All right. So if you have bad credit, they're looking at what's going on with the deposits and everything. That's what they're looking at. All right. Then you have Fundo. All right. That gives you 10K. All right. So again, these type of companies, they're not looking at what's on the credit file. They're looking at what's going on with the bank account. Do you have regular deposits, at least 3 to 4 deposits a month of income coming in, and above usually about $1,500 a more? Okay, so that's the reason why they're there. All right, then you have Lendeska. All right, so with Lendeska, they're giving you 20. Okay, they're giving you up to 20. All right, so the minimum annual revenue they want you to be making is at least 25K with a 550 credit score. Okay, now remember I was telling you about Fair Figure. So Fair Figure, we're gonna put them over here again. So with Fair Figure, if you're making revenue at least 2,500, they give you anywhere from 500 on a loan and up, which is a financial instrument. All right, then let's look at some of the credit cards. So with the credit cards, since you have such a low credit score, then you want the Capital One Spark. Okay, so with the Capital One Spark, again, 580 credit score. Usually, I've seen most of my clients, they usually get anywhere starting out between 2 to 3K starting out with bad credit with Capital One. And the thing about it with Capital One, like I tell you, if you had a relationship on the personal side and that relationship went sour and the charge off is over a year, you still may qualify for this card. Now, the only thing that people don't like about this here card is that it does report both on the personal and the business. All right. Then you have Divvy. Okay. Divvy is a charge card. All right. Now with the Divvy charge card, they give you option of 1 week, bi-weekly, or monthly. Okay, so the shorter the term, the more money they give you. So if you're going to say, well, okay, I'll pay the card off in a week or whatever, they'll give you higher limits. If you're going to say, well, I'll pay it off in 30 days, they give you a lower limit. All right, so that's something that you have to keep in mind. Now, I want to tell you about some of the CDFIs. Okay, so with the CDFIs, they're Community Development Financial Institute. All right, and so they work with businesses in impoverished communities that need funding as well. Okay, so then you have, and I'll put it here. You have a Dream Spring. Okay, so with Dream Spring, they give you up to a $50,000 line of credit. Now, because Dream Spring, it is a business product, but it's a $50,000 line of credit, and it reports on both the personal and the business. Now, they more likely, and it's funded through Upstart. Okay, so for some of you all that want to be aware of that. Now, here's the thing about it with the CDFIs, Dream Spring. The big thing about it is just needing a 620 credit score in order to qualify with them. Okay, so you also have the economic development. So the economic development is a CDFI, okay? They give you up to $10,000 on the business. And then you also have People's Trust, okay? They give up to $10,000 as well. All right. Now these are CDFIs, okay? So to be able to help you get qualified for funding, all right? Now, here's the thing about it. I want to go back to the other big dogs because I only just gave a few. You also have, and I'll put it right here, Wells Fargo. Wells Fargo, they use a Experian FICO 9, okay? So that's also another one of the big dogs to be able to work with you, all right? So that's the reason why it's certain ones. And then you have GM. GM Business, they use Equifax FICO 9, okay? So now you have a variety of where to start to go from $50,000 to $100,000, and you have a roadmap. If you guys think that I've been doing a good job, put a comment below. If you have any other questions, schedule a one-on-one consultation, all right, so I can help you look at the personal credit, do an evaluation of the personal credit. Then we can look at a business credit strategy. And then if there's anything that needs to be addressed on a personal credit, I can help you out with that, as well as give you more insights of different lenders as well. All right, so I hope this helps you. If you have any other questions, click the link in the description. Schedule a one-on-one consultation. Thank you.